Hello, I'm Terry Daniels, Director of Trust Investments with the Wealth Management Group at CNB Bank & Trust, with your market update for the month ended August 31st, 2017. Large U.S. stocks were slightly positive for the month, led by the technology-heavy NASDAQ, which was up 1.27%, while small stocks in the Russell 2000 fell by 1.27%. International stocks were mixed, with more aggressive emerging market stocks rebounding from previous lows to finish up 2.01%, while developing market stocks finished down 0.04%. Investment-grade corporate and government bonds outperformed riskier junk bonds as investors sought safety over yield. This flight to quality is also reflected in lower yields for the 10-year Treasury, which was down during the month. Gold finished up 5.1% for the month as investors sought a flight to safety and a possible hedge against inflation. While August was rather ho-hum for the markets, we believe that the markets overall remain priced for perfection and are vulnerable to profit-taking in the near term. To illustrate our point, look at this graph from Yahoo Finance of the S&P 500. The first two areas circled on the graph represent two prior peaks in the S&P that were subsequently followed by declines of approximately 50% in each case. The first circle on the graph is the peak of the technology or dot-com bubble in 2000. Followed by the subsequent decline. The second circle on the graph is the peak prior to the financial crisis in 2008, followed by its decline. The last circle on the graph shows where the S&P is today and how far it's climbed on continued investor expectations that taxes will be lower, interest rates won't increase, and markets face no real fundamental risk. Given the level of the market, we feel investors should remain cautious through year-end. We believe that a potential perfect storm is brewing for a pullback in stocks. Specifically, the stock market is at a higher level than previous peaks, with the S&P current price-to-earnings ratio of about 24.6 times versus its historical average of about 15.7. We also believe investor expectations may be too optimistic regarding tax cuts, interest rates, and economic growth, making stocks priced for perfection and vulnerable to a pullback. We believe that now is a good time for investors to review their portfolios and rebalance if needed. Specifically, we suggest investors have realistic expectations regarding future stock returns. Stocks have already had a bull run for about 8 years and are vulnerable to a near-term pullback. Review portfolio allocations to make sure you have the appropriate mix of cash, bonds, and stocks based on your circumstances and risk tolerance, and rebalance if needed. Most of all, stay disciplined and stick to your investment objective. Don't chase returns. Thank you for joining us. If your portfolio has become unbalanced due to recent market activity or your needs have changed, please contact a member of CNB's Wealth Management Group to schedule a review of your portfolio and discuss suggested actions.